Hi everyone, and thank you for taking a few minutes to watch this video. Today I'm talking about success. A huge component of what I do every day, whether it's with my one-on-one clients, whether it's with corporate clients, is defining this idea of success. But, well, I want to niche it right down to financial success and actually give you the 5 keys to achieving success that I learned through working almost 20 years in the investment advisory space. Now, before I dive into those 5 keys, as always, I would love it if you could like this video, subscribe to the channel. It genuinely does make a difference. It helps me get this messaging out to a bigger audience, which makes such an impact to me and to everyone that watches the content. So like the video, subscribe to the channel. Now, 5 keys to success. Like I said, I spent almost 20 years working in investment advisory. 8 years of that running my own firm, working with a group of high net worth individuals and families, a lot of business owners, a lot of professionals. And through my journey, I had to reflect and think, well, what was the most common, the most profitable, the most productive ways of investing money? And why did I want to do a video on financial success? Well, financial success, financial wealth, income, cash flow, expenses, this is all so relevant to you because money or finances is causing so many people stress right now. Cash flow, income worries, expenses going up. The cost of living is through the roof and it is stressing so many people out. And or conversely, what do we do with our money when we are accumulating some cash on the side, but we want to start building some cash on the side? Actually, how do we build wealth? And I'm talking wealth that's for us, but also generational for our children and their children. So let's address what I believe are the 5 key ways to financial success, starting with you today. The first one you may not think about when we're talking financial success, but it's actually swim your own race. First and foremost, do not compare yourself to others. Living a lifestyle that's perhaps outside of your means, outside of your capabilities, based on your current earning capacity, it's a very dangerous strategy. Huge amounts of debt, really high expenses, all in the pursuit of looking a certain way, keeping up with the Joneses we always hear about. It creates a huge amount of stress for people when they're trying to live a lifestyle that's outside of their capacity. So first and foremost, understand what life looks like to you, what you want it to look like, what you value, what your passions are, what your real lifestyle expenses are and should be. Don't worry about what everyone else's life looks like. Just focus on self and live your own life. If people are judging you for what you drive or where you live, then perhaps they're not people that you want to have in your circle anymore. So number 1, live your own life. Swim your own race. Stop comparing yourself to others. Live a lifestyle that is within inside of your current earning capacity. Number 2, we're getting very niche here with the investment, but understand your tolerance to volatility or your tolerance to risk. What I saw here for so many years was that everybody wants an investment, an asset, whether it's a share or a property, that does like 300% return. Who doesn't want to get a 300% return on their money? But I'm yet to also find an investment that generates a 300% return that didn't come with either significant risk or a lot of volatility to get there. Hunting returns can be very dangerous, especially when we're trying to play the long game. The long game is we're investing here for the next 10, 20, 30 years. When we hear of a lot of those people that have put their money into small cap stocks, those little micro tiny stocks, and they tell you about the win they had where it went from $1 to $10, I would suggest that 9 out of 10 of their other investments went backwards or went to zero. Investments that are high risk for the high reward come typically with volatility, and we're especially talking about equities. So smoothing out that volatility might be more inside of your comfort zone, your tolerance to volatility and risk. If you can tolerate a high amount of risk, a high amount of volatility, then sure, put some money into these high risk, high reward potential investments. But if you're trying to play the long game here, like many of us really are, then look at a portfolio more broadly, look at perhaps a more stable level of returns. And a great investment here, and what I do with my money, is index funds, exchange traded funds that replicate an index. So they replicate what a market does or an asset class does. They're more stable over time, less volatile, but the returns are potentially lower. But hey, I'm pretty happy to get 8, 9% year on year for the next 10, 20, 30 years. Because with compounding and collectively over time and adding more money back into that portfolio, that's going to get me to where I need to go. I don't like the volatility that comes with these high risk, high reward investments. The third one is diversification. I suspect many of you will have heard of this before, but are you adhering to it? Diversification is key. It really is. We're talking about spreading your money across different types of asset classes. Most commonly, we're talking cash, we're talking shares, we're talking property, and more recently, crypto. Now, crypto is not a space that I personally put money in. I don't understand it enough, and I like to be familiar with the investments I'm putting money in, and I would suggest you do too. So cash, shares, and property. Diversification, putting money across each one of those asset classes. How you can do that will depend on how much money you have, again, your tolerance to volatility, and also your experience with investing. We can do it in a myriad of ways. But why it's really important is because, well, yes, cash is conservative, but perhaps if the equity markets are really volatile, are really risky, are coming off, perhaps there's war, perhaps there's economic problems which are causing some volatility and risk in the market, then perhaps some stability of cash or certain types of property might stabilize that volatility, lower the risk of the portfolio. If you're happy to go all in on property or all in on shares, either you have a high level of risk, a risk tolerance is very high, or you have some insider knowledge that that asset class is going to do exceptionally well. So I would recommend diversification is key to success. Number 4, investing in a tax-effective manner. No one likes paying tax. Come on, let's be honest. It takes so much effort to earn this money, whether it's through personal exertion or investing, paying some in tax. Well, it hurts. So having a really good accountant in your corner is key here. But investing in a tax-effective manner. Now, it could be utilizing superannuation. So for those of you based in Australia, looking at what superannuation vehicle you use, your retirement fund. Is it perhaps looking at, well, maybe I've got a property with a lot of equity in it. Could I use some of that equity? Could I draw down, could I borrow against some of that equity and invest that money into some of those asset classes? And why would we do that? Well, because then the interest expense on that loan becomes tax deductible. Now again, it all comes down to your tolerance to risk, your ability to borrow, but that's a strategy as well for sure. Let's look at effectively borrowing some funds and getting a tax deduction for that interest expense. Again, that's Australian focused. But also, what structure are you using to invest in? Most of us, right, we default to just buying all these things in our own name. Speak to your accountant, perhaps using a company structure, a family trust, again, superannuation. There's other vehicles that might be more tax effective. And again, collectively over time, these tax savings, tax benefits, increase our capacity to build our wealth. Number 5, lucky number 5. Income is hard enough to get at the best of times. And right now, cash flow is so important because it is so expensive to live. So, well, how can we get more income? Number 1, I would suggest either upskilling or furthering your education. Make you more desirable to employ or to start your own business. Upskilling or more education. Perhaps with those new skills, that further education, your hourly rate or your salary can uplift. The second one is invest in assets that generate an income. Again, most commonly here, we're talking about things like property, where there's rent from the property, or shares that pay you an income through something like a dividend. So we're investing in assets that actually pay us an income, which can either be used to reinvest or to pay us an income to live. So again, especially with a portfolio, if it's paying you a dividend, it could perhaps be reinvested back into the portfolio and you buy more assets. And the third one, how do I get more income? Perhaps turn a hobby into a side hustle or an income stream. Some random examples could be, well, hey, have you been collecting basketball cards for like the last 30 years of your life? Well, maybe there's a side hustle there. Do you love surfing? But maybe you could on weekends take a surf school. You see where I'm going? It's how can you generate some more income through doing something you love? So these are what I've seen over time as 5 key ways to generate financial success. Overarching theme, I would recommend most try to play the long game here. Don't look for a win over the next 3, 6, 12 months. Look to the next 10, 20, 30 years, depending on your investment time horizon, your age, but play the long game. So number 1, don't compare yourself to others, live within inside your means, live the lifestyle that's able to be achieved without running your cash flow to zero. Look at your tolerance to risk or volatility through investing. Where should you be allocating your money? Perhaps more defensive investments as opposed to these high risk, potential high reward investments. Number 3, diversification. Look at those different asset classes and perhaps spread your money across all of them. Number 4, look at how you're investing. What entity or structure are you using? Take a tax saving where you can. And number 5 is upskill, re-educate, invest in assets that generate an income, or turn a hobby into a hustle or a second business. Try to generate more income. Guys, I hope this has been of use to you. I hope you enjoy these videos. As always, like, subscribe. I look forward to speaking with you all soon.